The strategy itself has only been going for a few months, like with back testing and then forward testing through the evaluation. But it has to be really logical. It can't be visual in terms of you're not looking for a pattern. In my mind, I'm thinking I can foresee the market going sideways. It does. Oh yeah, I am getting false breakouts. It's very easy to say trade here and everyone can see it on a chart. But when you actually see someone's entries, stops and profit targets, you can see where they're actually taking trades. If I could hit 10% without hitting 5% first, then that was kind of a bonus.
If you had the opportunity to automate a strategy that actually works and make consistent returns as a funded trader, would you do it? Well, that's exactly what Nev, our most recent portfolio manager, has done. He has passed the evaluation and he's done exactly that. He has taken a strategy that works and has automated. So watch the interview because he's going to tell you the exact steps of how he managed to reverse engineer a strategy and automate it. And make sure that you are smashing that like button and subscribing to this channel. You know, we've been talking before this interview and you raised some really interesting points about the importance for you of having automation so that you trust the system. Because a lot of traders, as funded traders, most traders are actually discretional. But for you, you figured out a way to automate your strategy. When did this journey begin where you started thinking about, you know what, I need to start automating this?
Well, I guess like over the last several years, I've always had a strategy that I'd follow and I'd either be taught it or I'd find it. After a while of discretionary trading those strategies, I'd always try and automate them. I'd always pay for someone to automate them, and then it would just turn out to be a dud strategy. So this is, luckily, a strategy that I've basically taken from someone else. Sort of reverse engineered it and then actually found a way of, I can't improve on it at the moment. I've tried different ways of like adding extra features and it's just not working out to help. So whilst the markets are in my favor and in the favor of the strategy, then the EA works. It's like we were saying before, it's a momentum breakout. So if there's a false breakout and consistently false breakouts for a period of time, then I'll revert to a more discretionary strategy to try and sort of actually get a trade in. So it's pretty much you're looking for those continuation moves. You're not trying to catch bottoms or tops. Essentially, you're kind of catching that meat of the move. So like there'll be some sort of period of range trading where the strategy and anytime I would have normally been discretionary trading would have failed because it would like run in my direction and pull back and all that type of stuff and like flip you around. So after that period of a range, there's always a move, like an expansion. So I just try and catch the expansion and then keep adding as it sort of continues to expand. And then I've got things in place which try and limit where it will add in. So like if it's gone beyond like the ATR for the day, then I probably won't add a trade and things like that. So I'm trying to find ways of not taking trades now. It's like hopefully, like, because the strategy itself has only been going for a few months, like with back testing and then forward testing through the evaluation. So I'm hoping to build up a bit of data which says, in my mind, I'm thinking when the Fed are talking, just like turn it off. When we're waiting for the FOMC to actually talk, turn it off. NFP, turn it off. Anything with a bit of volatility where they'll spike it up, take some stops and then reverse. Is essentially where I kind of need to, or if it goes sideways, like we're waiting for economic data to come out and there's a big anticipation for it, I might as well just turn it off and do something else. So.
Right. Your strategy isn't fully automated. Although you automated the actual entry, your participation, involvement in it is more about turning it on, turning it off, right?
It will be. Like, I mean, I haven't yet turned it off. Like that's the problem. Like I'm just trying to, in my mind, I'm thinking I can foresee the market going sideways. It does. Oh yeah, I am getting false breakouts. So it's kind of confirming my main thesis really, that I need to wait. But then obviously I don't want to turn it off and then miss something like which happened earlier on in the week where the yen just absolutely collapsed, or like the Nasdaq shot up. So I'm trying to work out how much I should be involved and how much I shouldn't be. But my main sort of suspicion is I know when the market generally goes sideways ahead of economic data, and I know when there's a spike up and down through like NFP and things like that. So
Yeah.
My suspicion is I should turn it off.
Yeah. So before you actually found this strategy, it wasn't even your strategy, you were reverse engineering it. So before that, so how long have you been trading, and how did you attempt to find consistency in your trading?
All right, so I've been doing it a while. Like I've been interested in the markets for probably a decade, but it's not my full-time job or passion. I've got other things going on. So the idea was quite quickly to get some education, and I tried different firms in the past. I lived just outside the city of London, so I felt like I could be able to tap into it. I found some places, they gave me some strategies. I failed to make them consistent. Obviously, it can't be my full-time job. So I've been in and out, but always interested, always learning, always finding different people to learn from. And essentially the sort of history of it, I've just been trying to find something, and then also trying to reinvent the wheel, as we said. Like I've tried that as well, tried to come up with something brand new, but that hasn't worked. But I've kind of got it down now to what I see the market as either being trending, going sideways, or breakouts to start the trend. So I've nailed it to the kind of trades that I like to do, and I've just, like I said recently, decided to buy high and sell higher, or sell low and buy lower, rather than trying to pick a bottom or pick a top, because like I said, I can't automate that, and I need to.
No, and I think it's so important that what you emphasize is that you found what works for you. And I know you were looking for it and you were trying to reinvent the wheel, but this is what so many traders are doing, is that they are trying to come up with a different type of strategy. They're trying to create some sort of new edge. Whereas right now, as the market moves, yes, it does move randomly, but let's speak the truth, it is a rigged market. And if it's a rigged market, that means that there can be measurable confluences, which once you know what they are and you put them together, you can spot the patterns. So
that's kind of what I did. So when people put up their trading statements, say, I just made 15 positive trades with a couple of losses, I thought, okay, well, the people I was looking at were actually quite trustworthy, and they were looking for business. Obviously, they wanted people to invest in them and stuff. So rather than invest in them, I just thought I'd just try and work out what the hell they were doing. So just by putting their sort of entries and stops and profit targets and things like that onto a chart, being a visual person, I kind of just spotted. And obviously, I've got a decade of in and out of the market, sort of seeing all the different types of trends, all the different types of sideways markets, mean reversion, all that. I've kind of seen what they do look like. So when I saw this guy putting up his statements and it looked like a breakout to me on the chart, it then became something I could automate. But I guess the win for me came from where he was taking profits and how he sort of structured his risk. So once I worked that out and I could see the consistency in his risk versus where his multiple profit targets were, then I was able to copy that, and it does work. Well, it has worked. It's just like it has worked in the past, so hopefully it'll work in the future.
So essentially what you're saying is that you to find an edge, look for someone, find their statement, get them to prove that they're profitable, and then reverse engineer everything by literally copying the entries, the stop losses, take profits, and just figuring out how they're doing it. That's
because I mean, I think if you've got the actual data, like the actual entry, stop and profit target, that's great, and you can reverse that. It's when people say look for, say, the fair value gap. You could look for a fair value gap on a chart, and it's very popular because it's very visual and everyone can see it. But it's where did they actually take the trade? Like, did they take it in the little gap on the 5-minute chart, or did they use the 4-hourly chart? It's very easy to say trade here and everyone can see it on a chart, but when you actually see someone's entries, stops and profit targets, you can see where they're actually taking trades. And for me, noticing that it was a breakout, I was familiar with the breakout strategy. It is more about how to structure the trade once you've got the entry. And now it's more about how do I not take a trade, because I don't want to keep taking these trades which fail quite a few times.
I think the analogy of it is that everybody can see the bullseye.
Everyone knows where the market's going half the time. They can see it's going there. So it's just, how does it get there?
Exactly. But do you know how to shoot the rifle? Do you know how to actually load up the magazine? Do you know where the safety button is? Do you know how to fix the scope? Do you know how to position your body? Do you know?
I also think, do you understand what you're going to do? Do you understand what you're going to do if you get a jam? Like if it's in the breach and it jams,
Yeah.
Like, or you take a trade and it just goes against you, whereas it should have gone in your favor, then I guess, again, we were talking about it's the struggle of knowing that you had a good idea and then accepting that the market just didn't let you have it that time, which I struggle with. So
I mean, it's a very common struggle, and but what you managed to do is not only reverse engineer a strategy that works, but you've managed to find a way to automate it. So how did you actually decide to do that? What steps did you take to automate this particular strategy?
So this particular strategy, obviously, I've got the data, the raw data, the in, out, and the sort of stops and stuff.
Yeah.
So I was able to lay it out on a chart visually. Once I recognized what type of strategy I thought it was, I was then able to, once you've got this entry, stop, and profit target, I was able to go into like a website called eabuilder.com.
Right. Just
lay it all out, like a flow diagram essentially in words, and then go and test it. So as simple as that. It's in the past where it's always been more difficult because somebody would say, oh, you need to wait for this indicator to go over here, and all those sort of complicated things happen. I would normally pay someone. I've got like a person that used to I would pay to automate the strategies. And the way that she would always talk to me was like, I would just say, it's like this, and this. And she goes, no, you have to be like a robot. You have to tell me exactly what you are thinking. So I'm now used to being in that sort of way of thinking. So like having to keep it logical. And if it's not logical, then I can't automate it, which is why when I see, quite a few strategies, I just, as much as I like to think I could discretionary trade them, obviously I've got the gremlins that come in through discretionary. If I can't make an EA out of it, then it's too complicated and I know I'm going to fail. So, personally fail.
So did this developer, did she help you build this one in particular, or?
No, this one, like I said, I've got it now to I only try and do the simplest of things in the markets. And if I can automate it, then it's simple. I just found that this person's strategy that they were promoting online was also simple, thankfully, and it worked. So and it's a strategy that everybody knows. It's essentially a breakout strategy. Anyone can do a breakout strategy, and it's normally the first strategy that was taught, over the years. But people get frustrated with the false breakouts. And I guess, that's the problem. As a discretionary trader, I could look at a head and shoulders pattern. And for me, I would be in your mindset thinking, okay, the stops are going to be above the right hand shoulder. There's probably going to be an acceleration through that to the head at least. Yeah. I have no idea how I describe that in logical code. I have no idea how you say, well, that's a head and shoulders pattern. It's just I don't know.
Exactly. How do you test that? But going back to that stage where you were automating it, at what point did you decide, okay, I've tested enough and I'm happy with this, I'm ready to risk some money on this? What was that testing phase like?
Well, the first thing is to kind of replicate what this particular chap was doing. So if I could get a similar entry to what he was showing, in the future, because he puts out his statements quite often, then I was happy that I was still seeing what he was seeing. So that was the first thing, were my entries, when I pressed go on the algo trading, would it provide that? So that's good. Obviously you get the visual confirmation on the back testing strategy tester software, so that's also good. I didn't bother optimizing anything because I kind of knew that I wanted to trade certain times throughout the day, but I'd already in my mind said, okay, I don't want to be trading during the sort of Asia Pac session and things like that. I want to do it when there is volume. So I guess my previous history gave me a little bit of an idea of when I would actually like to have pressed the button, but obviously I want the EA to do it for me. So that's just making sure that worked, making sure it wasn't trading in and out of those hours when I didn't want it to. That was another thing I tested. And then having CTI and other funded programs give you their sort of rules, if it was a 5% drawdown and 10% profit target, I didn't have to tweak anything else. I just waited to see if I could get an equity curve to go from the bottom left-hand corner to the top right-hand corner in, live trading. Because obviously the back testing is, it could be on tick data, and it's I had to forward test it. So once I forward tested it and still got that, and, I tried to be accountable as well by publishing how it was doing each week or each month. So people, took a bit of an interest. So once I was happy that I was seeing similar results to what I was expecting in the sort of markets going forward, then it just turns out that I'd also like stopped doing another type of job, and I wanted to concentrate a little bit more on actual trading rather than analysis. So once I started really pushing for it, then I was able to come up with other reasons not to trade, and then again you just back test it, forward test it, and then done.
Wow. So when you were forward testing in real time, you were actually forward testing multiple funded accounts. You were testing to see if you can obviously stay within the drawdown, but obviously then hit that target. So
that's it. You lot give rules, so and they're the rules that you need to work within. So I just wanted to make sure, and that was half the problem, like having to position size then, like making sure that if this was going to work, that I didn't get stopped out on one trade. So.
Yeah, exactly. So did you do this on a small live account, or did you do this on a demo account, the forward testing?
I did it. Well, I've done it on everything. I've got lots of accounts. Yeah, I've done it on everything.
Okay. What would you say when it comes to, during this testing phase, would you say there's a difference between a demo and a live account when you are forward testing? What would you recommend?
If you had asked me that 3 days ago, I'd have said no. But there are certain brokers out there, some certain liquidity providers, that their demo account does reflect the sort of markets, what I'd consider to be the real markets. But the last couple of days, the demo servers have been dropping out and things like that. So that's that would have been a worry during the trading's, the sort of testing stage. And also across the different brokers, even with the same liquidity providers, you can get the commissions and the spreads change. So I was confused for a little while whilst being on similar funded, accounts with different people, but with the same broker. I was getting into some trades and not others. So that's a thing to consider. Like not every trade was hit equally across all the different platforms.
Wow. And how did you find CTI's spreads and execution from your perspective? How did you find it?
It's really good. As in, that's kind of why I'm here, I guess. Just still here. So it's good. I've got literally, like if you'd put another couple of, because I'm not on the sort of 1 minute, 5 minute, I'm sort of 30 minute and daily. For me, that it's not critical to have like zero spread on the euro versus US dollar. The commissions, obviously across the board, because I take multiple entries, that does eat into the profits. So that is something that, again, a reason why I'm kind of looking to take less trades is to just try and mitigate the commissions, really. But the spreads and any other sort of thing like that, swap fees, I don't have to worry about because I'm closed at 9 p.m.
Right, so you all your trades are pretty much, you're day trading essentially.
Yeah, I read Flash Boys, and there's like one sentence in there that said that all the HFTs turn off at night. So I don't know if you've ever looked at the futures, but there's programs like Bookmap where they'll show you the volume on the order book, and then at 9 p.m. the volume just goes. It's just like, okay, I'm not going to trade then. It's just like, there's just no point. I mean, if I do take a trade, it's because I'm in what I consider to be a good trade. Yeah. But that's discretionary. The EA itself, like what I consider all the HFTs to do, I'm going to just turn it off when they turn it off.
Interesting. So let's have a look at your stats. So you started off in August, so not so long ago, because we're in the first week of October.
A terrible time for Forex.
How did that go for
you? When you would have. That was awful, because like May, June was like when I was coming up with this idea. So May, June, the yen was dropping, dollar was going up, and things like that. So everything was going really well, and the equity curve on the testing, if you like, was bottom left-hand corner as the top right-hand corner. But then obviously the FOMC stopped in June, I think it was. I don't think there's like 1 month so July the 16th, I think, was the last FOMC for the summer. So there was a period of nothing over August, and everybody was waiting for the September meeting. So for me, Forex kind of just bumbled sideways. So there was a lot of false breakouts, or we were going against like counter trend. So I also look to a higher time frame for my direction, and I want to trade in line with that. So if the market's kind of rising into the mean of that, then I can't use it. This EA doesn't trade then because it's counter trend. I'm looking for momentum in line with the trend. So
exactly. But you still manage to survive.
You can see it does start to go up, which is gives me confidence. and then for whatever reason, August is holiday period, I guess.
So
I was on holiday.
This was August, would you say?
Probably, yeah. So any dips, like any sort of big dips, are discretionary, sort of high leverage trades. And yeah, when that idea works out, that's when you get the parabolic sort of rise. And then I go back to the EA. But anything steadily declining is also the EA. So steady declines are false breakouts, essentially.
Like these ones here.
Where are you looking? What sort of trade number? Sort of like from 585 onwards?
390 onwards.
Oh, yeah. So like anything that's steadily dropping off, like there, and then again, there's like a bit of a sort of a waterfall around 585 towards 600, and then a steady decline. That's normally Forex, because there's generally 3 positions per idea. So be it on the euro yen, there'd be like 3 positions, and yeah, if you keep getting multiple fake outs, then that can be detrimental.
And just looking at this chart, how do you handle the struggles, the mental struggles of trading, especially during drawdown periods? As a semi-automated trader, how do you handle and overcome these?
If there's like multiple, like for instance, there was a period of time when I was getting faked out way too many times, and I tried to work out where. So at that point, rather than sort of just accepting it, I thought I need to sort of stop this, because it just felt like it was taking trades where I would have given up. The EA still wanted to carry on. So in that instance, there was a time when I was allowing the EA to take trades below the previous candle's low. You know, if it met all the other rules and was trading below the previous candle's low, you know, that to me became obvious that it needed to change. I needed to stop, have a cut off before the previous candle's low. So during like periods of drawdown, if I felt like I could improve the strategy, then I'd go away and try and improve it. Or if I saw the Nasdaq moving in a way that I felt would be beneficial to the account, then I would just stop trading Forex and go to a different market, which is what I hope to do in the future. If I can automate my Nasdaq trades, then I could be fully automated, and I would flip between Forex and indices then, because the indices move quite a lot.
Yeah.
So you can generally find a trade, and I have been trading them for a couple of years, with other places. So for the Forex, this is just a reminder of why I left Forex in the first place, because if it goes sideways, I don't like it. Whereas with the indices, it's just nice to have that sort of either or.
Yeah. Okay, that's an interesting way to sort of maintain good levels of sort of mindset, psychological capital, mental capital, as they say. Whatever you're doing seems to be working, just having that sort of mix between automated trading and manual-based trading. So
well, the idea is to get to fully have like the strategy at least automated for like when it buys us a position or sells a position. That's where I want to be. And then I think there will. I can't imagine I'm ever going to be like Jim Simons or whatever, like just letting things go. I think I'm going to have to sort of be turning it on and off around. I don't know how to automate it to stop trading before the market goes sideways. So, but I can see it on the calendar. I can see it on the economic calendar. There's going to be a load of FOMC people talking. I might as well just stop.
Yeah. Well, I'm sure you figure out. You've managed to come this far. I'm sure you can figure out how to automate it, especially when it comes to news events. Because I have seen EAs that are able to, just not let any orders go through during specific economic events. Right. So let's go through your stats. Now, looking at these stats, would you say that they are consistent with the back testing? Are they like profit factor and profit recovery? That's the kind. I didn't want to go any much lower than that, really. I want the EA itself to be able to do those type of figures. Right. Okay. What other stats here are in line with your back testing?
Essentially, the amount of trades, like percentage of total profitable trades. Ideally, in the forward testing, it was like 60%. The market was trending, so I was able to like consistently make profitable trades. But I'd be happy with if that was a little bit higher, like 50%. So obviously, some of the trades were discretionary. So, quite a few of the trades were discretionary. So that brought the profitable percentages down. But I'd be happy with a 50% win rate, because the risk to reward is generally like greater than 1 to 2.
Fantastic.
It's not 1 to 2 once Another part of the strategy is it moves 25 pips in my favor, it all gets back to break even. So, that's when you get that sort of reduction in profitable trades. They're kind of just null.
So if there are other traders out there that wanted to automate their strategy or figure out how to reverse engineer someone else's strategy, what tips would you give those traders?
But it has to be really logical. It can't be visual in terms of you're not looking for a pattern that I know of. I personally don't know how to trade a pattern with an EA. So if it's something to do like an open, high, low, or close of a candle, or one of the candles previously, then that's logical because that's like an actual numerical figure. So if you can find a strategy which does that, then you can use something as simple as eabuilder.com, or I know that CTI have got their algo type stuff. If it is more complicated, then you just need to find someone willing to code it for you. I think the simplest strategies are best for coding because you can just do minor tweaks and it's easy.
Fantastic. And final question, how has been your experience with City Traders Imperium, the funding, the payout? How has been your overall experience with our service?
All right, so having one-to-one talk with you, that's great. That's obviously a massive benefit because it makes you feel like you're actually talking to real people. Yeah. Obviously we see you see people on YouTube and it's like that's a familiarity, so that's good as well. So there are real people behind the website, so that's good. But before that, the rules were clear. The actual filling out the form, paying, that was all easy, and as easy as a lot of other people. So competitively, you're as good as everybody else at that point. The spreads and, like I said, the actual rules were all very reasonable, and I guess the encouragement is to be consistent, so that's good. You're not just looking for people to one-hit wonders. So everything was good about CTI so far. Having someone review my account prior to this, sort of telling me if I had actually got through the 30 days, made the profit and things like that was useful because and if it had just been an automated response, it would have been a bit, I'd have been annoyed at myself, but I'd have blamed you. It's good to have like a real person. I guess like most traders get to a point where they're looking for more funds, but they're also looking for some sort of accountability, so someone to sort of keep you in check. It'd be great to have a risk manager saying, don't put that trade on, you're going to blow up your account. But I don't think we're going to get that from CTI just yet. But everything else is kind of geared. Everything else is geared towards trying to keep us consistent. So that's all we want.
Exactly. Cool. Well, Nev, been an absolute honor. I'm really excited about your future. You seem like you're onto something. You've tested it. You've now passed the evaluation. You're now one of our portfolio managers. So now you've got an opportunity to start scaling. So very, very excited. I wish you the best of luck. And thanks so much for your time today.
No worries. Thank you.